What is going on, YouTube Nation? This is Darth Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So this is a 2-series edition. This is the BDC and stock edition. These guys have significant dividend increases. 2 of them are on my radar, and they didn't make the list yet, but I'm going to do a review on them. So we got 3 of them I like, and I'm buying. 2 of them I don't like. So a lot of people are asking me questions on these 2 stocks. So I'll do a review on them. So I'll go over their dividend history and how they are as a business development company. Oops, I gave you a hint right there. So again, make sure you smash that like button, and don't worry, I didn't mention Prospect Capital. I'm not a fan of those guys. So let's check this out right now. So here's one that has done decent against the S&P. That's Gladstone Investment Corporation, sitting at $16.89. PE ratio of 5.05, so that's a little bit on the low side, but it's starting to catch up with the S&P. Dividend yield is 5.33%. Year range was $10.10 to $17.15. Day range was $16.77 to $17.09. Previous close was $16.78. What makes this business development company a special dividend stock, and why I own over 100 shares and am considering buying more? Let's check this out. They're a business development company, which is a private equity fund focused on acquiring mature and little market companies with 20 to 100 million in revenue, attractive fundamentals, and strong management teams, investing alongside both management teams and independent sponsors. Gain typically provides most, if not all, of the equity and debt capital required to close a transaction, which greatly increases certainty and speed of closing. Additionally, as a publicly traded fund, we differ from our private equity funds that we have no partnership in the end of life deadlines and can provide truly patient long-term capital. So this is the big thing. They have manufacturing, consumer products, business, consumer services. So they're well diversified. This is what I like about these guys. And I'll go to their portfolio. I'm trying to still fighting off the bug. I'm just about 100%. A little congested, but it's just about gone. So here's Bassett Creek Services, B&T CRP, Golf, Utility and Leisure Cars, Diligent Delivery Systems, Educators Resource, Managed Labor Solutions. So they're well diversified. The Maids, and if you click this, here's an example. So the Maids International is a franchisor home service brand. The Maids is a quality leader among house cleaning services in the industry, with franchise company-owned location in over 40 U.S. states and 3 Canadian provinces. So you're seeing well diversification, and this is what I like about these guys. And the thing is, okay, these guys are very transparent. So I just literally clicked on their website, and they're very transparent about and regarding what they have and what they bring to the table, which makes them a very impressive business development company. The other thing about business development companies, remember, 90% of their earnings come back to us. So these guys are slowly growing. They're slowly getting more powerful, and I'll show you how they're doing revenue-wise. So there's a few things with these guys. The revenue-wise, if you look at 2015, this is in millions of US dollars, 41, then 50, then 51, then 58, then 59, then 61. Pandemic hit, they went a little bit down. You can play the pandemic card. That's totally understandable. And here's the thing. They're generating revenue. Their trends are going up. This is what I like about these guys as a monthly dividend stock. They're making money. They're acquiring people, and they're making money. That's what makes them a great business development company. That's why I'm long in these guys, and I'm going to show you their dividend history. So slowly, as a monthly dividend stock, these guys have done well. So you're seeing 6 cents, then they hit 7 cents, then they hit, you'd say 0.075 cents, then they hit 9 cents, and then they took a little bit of a hit and went back down. Look at this, 9/2/2021, they hit 3 cents. So again, as a business development company, they were trying to fight. They have a low PE ratio. That's one thing to be aware of. But again, I like the consistency. Look at this. Going way back, even a long time ago. 5 cents, 6 cents, 7 cents. I know they hit 9, which is kind of like, if you want to say, a special dividend. But they're getting back up there. And, that's what I like about these guys. They're very transparent on their website. They're generating revenue, and I see them making a comeback. And again, this is not financial advice for entertainment purposes, only disclaimer in the description. But I really like these guys as a monthly dividend business development company. Let's jump to the next one. And here's another one that's a very popular dividend stock, Gladstone Capital Corporation. GLAD is a symbol, has a dividend yield of 6.95%, a PE ratio of 4.42, volume is 140.45K, market cap is 384.90 million US dollars. Z range was 873 to 1258. Kudos to you if you bought the dip. Stay range was 1103 to 1150. Previous close was 1129. So let's check these guys out a little bit, and let's go a little bit more in depth. These guys were founded in 2001 as one of the first business development company funds focused on investing in loans to lower middle market businesses. So they are one of the Gladstone Company's family of investment funds, which currently manage $3.4 billion in assets, focus on financing established growth-oriented, recession-resistant businesses with cash flow profile to support a leveraged capital structure. They use their strong capital base and investment experience to deliver flexible debt capital solutions tailored to support private equity buyouts, make acquisitions, or make capital available to support the business growth objectives. So let's check out their portfolio real quick. They have certain sectors that they go in: aerospace and defense, telecommunications, restaurant, education, automotive, heavy truck. I like that. Food, oil, and gas. They have a well-diversified portfolio: defense, aerospace, electronic manufacturing. I mean, I'm just going up and down. So that's pretty attractive. Wow, I didn't realize arc drilling was part of that. Well, I find that very interesting. And again, it says teamwork, partnership, dedication. Gladstone Capital provides loans to middle market businesses below our representative portfolio companies. For a full listing, please refer to our periodic reports on Q10 to 10K. So let's check out how much revenue they're generating. That's a big thing, especially with these guys, their portfolio and their history. So here's the thing with these guys. Look at these trends. 2015, this is in millions US dollars, 38, 2016, 39, then 39, 233, then 445, 581, then 50, 35, then 47, 959, and then 53. So you saw a dip right here from 50 to 47. You can blame the pandemic, and they're rebounding. So that's one really good thing, but we really need to check their dividend history. So here's some things. Starting in 2008, in 2009 it was 14 cents as a monthly dividend. Then it hit 7 cents. Been 7 cents for a lot of years. Really not a good dividend growth rate. Okay, you can blame the pandemic. It's 6 cents right here. But it really hasn't rebounded. It has a low PE ratio of 4.42. Annualized dividend of 78 cents, sitting at 11.22. Looking at these trends, I am not buying this one. I did have it a long time ago and I sold it because look at these. This is let's start a dip from 2009. So at 2009 it was sitting at 7 cents. It has never rebounded. Never has rebounded. And it never has even jumped up to 8 cents. So that's a turnoff for me. I know these guys are, a well-known monthly dividend stock, but that's why it's a turnoff on me. If I start seeing an increase in dividends, sure, I'm going to consider buying that, but I don't like the dividend trends. It's slow, it's stagnant, it's not improving. So how would you feel as a dividend investor? I want to raise. You want to raise? I mean, look at the way Gain looks. Gain looks way better than Glad. So Glad right now is a turnoff. I'm going to closely watch that one. Let's jump to the next dividend stock. And this is probably my favorite monthly dividend business development company, Main Street Capital. It's sitting at $44.50. Has a dividend yield of 5.80%, a PE ratio of 9.64. Its volume is 295.99K. Market cap is 3.10 billion US dollars. Its year range is 31.32 to 47.13. Day range is 44.12 to 44.71. So here's the thing. These guys have not really done strong against the S&P in the past 5 years, especially during that dip. So that's one thing that makes these guys a very attractive dividend stock. And let's check these guys out. So a lot of you guys are new to my channel, and bear with me, I'm still struggling with this bug. Check these guys out. Provide one-stop capital solutions for lower middle market companies seeking to grow or transition ownership. We offer entrepreneurs, business owners, management teams a number of advantages to help each business realize its full potential and generate wealth for owners. They have flexible capital, long-term outlook, operational autonomy, efficient execution, but the big thing is their portfolio companies. So they are well diversified, and this is what I like about these guys. So this is Bridge Capital Solutions. All of these are very transparent on their website. Software, I mean, this is just very awesome with the way that they're transparent. Look at all these things that they acquire. New York Pizza Department. I mean, all this stuff. They're so well diversified. What's pretty cool is Phantom Fireworks they own. I actually have bought fireworks from these guys in the past, and I think that's really cool that that they're diversified and they own Phantom Fireworks. I think that's really cool. And Phantom Fireworks was pretty big in Northeast Ohio, I'm not gonna lie, and in other states. So Willis Group, Vision Sign. So I like the diversity of these guys. So here's the thing. I'll just I'll go over just one of them. Let's do the pizza department. The New York Pizza Department is a New York-themed pizzeria and Italian restaurant with locations across the Phoenix metro area. The company offers full-service, sit-down dining, counter service, carry-out, and delivery at its 11 locations throughout the Phoenix metro area. The menu includes high-quality pizzas, pastas, salads, and other specialty items with a focus on customer service. NYPD also offers a quick express option at lunch, so patrons can go directly and order the counter and receive menu items quickly. The company is led by a veteran team of industry experts with experience managing and growing multi-location restaurants. So they're founded in 1996. The sector is consumer discretionary. Headquarters in Phoenix. So that's just one of them. So these guys are and I actually looked into this before I even clicked this for you guys, and these guys have a very good reputation in the area. So this is what these guys do. They acquire really good companies, and being a business development company, again, 90% of what they make come back to us, or they get a big penalty. Now, what's interesting is their revenue and their dividend history, which we'll go over. So look at this revenue. This is 2014. This is in millions US dollars, 140, 164, 178, 205, 233. Then it was 243. Then 222. It took a little bit of a hit during the pandemic, but looking at these trends, these guys have done a phenomenal job as a business development company. I really love their dividend history. This is why they're my favorite monthly dividend business development company. And look at these trends. It's sitting at, this is 2015, 17 cents, 17.5, 18, 18.5, 19, then it hit 20 cents, then it hit 21 cents. And they took a little bit of a hit. Big deal. Not too worried because they're jumping up. These trends show that they're jumping up. Now, if you look at Glad, the way I looked at, revealed to you, Glad took forever. So that's why they were a turnoff to me. Gains going up, mains going up. And that's why I like these guys as a business development company, and one of my favorite business development companies. It has a 5.75% dividend yield, a PE ratio 9.59, annual dividend 258. Slow. The price per share is very slow versus the S&P. So these guys took a hit, and I capitalized. And again, I'm looking at probably throwing a little bit of extra money and taking that money out from that one crowdfunding with those guys, because they're not up to par. Their philosophy is not to where it was, and all of a sudden they changed everything, and I don't like that. And they're going to show a lack of transparency potentially, and these guys are transparent, and I'm getting something out of it. So why not put money in these guys? Let's jump to the next dividend stock. And this one's really on my radar. Horizon Technology Finance Corp. I know I did a previous video on these guys. They're sitting at $15.79. Their dividend yield is 7.60%. The PE ratio is 11.22. The volume's 117.93. The market cap is 322.55 million US dollars. Its year range is 1223 to 1908. Stay range is 1575 to 1609. Previous close is 1587. So what is so special about these guys as a business development company? These guys are located in Farmington, Connecticut. They are the leading venture lending platform that thoroughly and creatively provides structured debt products to life sciences and technology companies. Their experienced team of investment and operations professionals have been providing debt capital to some of the most exciting companies for decades. The members of the team have collectively originated and invested more than $5 billion in venture loans to thousands of companies. Since 2004, they have directly originated and invested more than $2.3 billion in venture loans to more than 285 growing companies. So this is what makes things very interesting with these guys. And I'll show you their portfolio. Their customers, typically and privately held development stage technology companies backed by established venture capital firms in emerging technology, life sciences, healthcare information and services, and sustainability industries. We also finance publicly traded technology and life science companies. That's very impressive. So here's just a lot of the companies, and if you want to do some digging, just go to horizontech.finance.com/portfolio. I studied these guys a lot, and there's a few things that I like about these guys as well, and I'm going to reveal to you their revenue. So look at this. This is 2014. This is in millions US dollars. 31.254, then 31.11, then 32, then 25. And all of a sudden they're waking up and doing some damage. 31.09, 43.125, and then 46. So they're making money during the pandemic. That makes these guys very attractive. Let's check out their dividend history. Now here's one thing that somewhat of a turnoff. This is almost like 0.115. Then it hit 10 cents. This is since 2016. It's been 10 cents. Then it hit 15 cents. You got a little bit of a special dividend, but it's still stagnant at 10 cents. So this is what turned me off. I want to raise. This is why I like Gain and Main better. Has a dividend yield of 7.56 and a PE ratio of 11.2 and annual dividend $1.20. So it's 1580, but I don't see any special. I see a special increase, but a special dividend, but where's the consistency with the increases? That's what turns me off with these guys. Did own them in my previous videos and got rid of them. And this is why. If I see a dividend a hike or an increase, absolutely. They're starting to generate revenue, and remember, 90% of what they earn have to come back to us. So there could be potential. So that's why these guys are on my radar. Let's jump to the final dividend stock. So here's Pembina Pipeline. I own this one. They're sitting at $30.84. Their previous close is $30.15. Its day range is $30.19 to $30.94. Year range is $25.24 to $34.73. Volume was 897.08K. So here's the thing about these guys. So Pembina Pipeline Corporation is the leading energy transportation and midstream service provider that has been serving North America's energy industry for more than 65 years. So here's the thing about them. So they safely operate over 18,000 kilometers of conventional transmission and oil sands and heavy oil pipelines across North America. So here's the thing. Their division provides customers with pipeline transportation, terminaling, storage, rail services, and key market hubs in Canada and the United States for crude oil, condensate, natural gas liquids, and natural gas. Natural gas is in demand. People are, anti-oil, but natural gas and natural gas liquids are huge. So that's the big thing. So here's just some information about them. And this is what I like about them. They have facilities and they have pipelines. Revenue-wise, they're not doing too bad either. Let's check that out. They're seeing some crazy trends. This 2014, 5,499, 3,658, 3,167, 4,116, 6,005, 5,742, 4,629. You can blame the pandemic there. But right now, I'm own these guys and I'm long in them. I like their significant dividend history, which make these guys very attractive. So check this out. This is 2015. It was 15, then it was 11, then it was 12, 11, and then it cracked 13, then 14, then 15, then 16, 17. It's a little bit, it's trending up, but I still need to keep an eye on these guys to make sure that their dividend's sustainable in the long run. So that's one thing that I really want to share with you guys. So main and gain and PBA, I absolutely love. Glad and Horizon, little iffy on. This one I need to keep a close eye on with PBA because of the revenue trends and everything, and with today's technology and all that. So if you're new to this channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Again, this is not financial advice, it's for entertainment purposes only. Disclaimer in the description. And PBA, I'm going to still keep a close eye on. If things change, I may sell it. So I can't say I'm long on those guys, but gain and main, I'm absolutely long on unless something crazy happens. So let me know what you guys think of these 5 monthly dividend stocks in this edition. So you guys take care and have a good one, and I'll see you guys in the comment section.